Did you know that 40% of global wealth is held in alternative investments? That's right, nearly half of the world's wealth is not in stocks and bonds. In the ever-changing financial landscape, the traditional investment vehicles of stocks, bonds, and cash are no longer the only game in town. Enter the world of alternative investments, a realm that offers a whole new array of opportunities for those seeking to diversify their portfolios and potentially increase their returns. The limitations of traditional investments are becoming increasingly apparent in today's volatile markets. Stocks, for instance, can be subject to wild price swings based on the whims of the marketplace. Bonds, while generally more stable, offer modest returns that may not keep pace with inflation. And cash, well, it's not really an investment at all. It's just a place to park your money where it earns little to no return. Traditional investments also tend to be highly correlated, meaning they move in the same direction at the same time. When stocks tumble, bonds often follow suit. This correlation can be a double-edged sword, amplifying losses when the market is in downturn. That's where alternative investments come in. These assets, which include everything from commodities and precious metals to cryptocurrencies, hedge funds, private equity, and venture capital, can provide a much-needed counterbalance to the ups and downs of traditional investments. They offer a way to diversify your portfolio not just across different asset classes, but across different types of investment behavior. Furthermore, alternative investments can potentially offer higher returns than their traditional counterparts. While they do come with their own set of risks, these risks can be mitigated through careful research, due diligence, and strategic asset allocation. So why do so many investors stick to the tried and true trio of stocks, bonds, and cash? Often it's simply a matter of familiarity, but in the world of investing, familiarity can be a costly comfort zone. So, if you've been sticking only to stocks and bonds, you're missing out on a significant portion of the investment landscape. So what exactly are these alternative investments? You're probably asking yourself, well, let's get into it. Alternative investments are a unique class of assets that don't fall under the traditional umbrella of publicly traded stocks, bonds, or cash. They're like the wild cards of the investment world, offering a different kind of thrill and potential reward for those willing to take the plunge. First, there are commodities. Think oil, grain, livestock, coffee beans, tangible items that are vital to the global economy. Commodities can be volatile, but they can also provide a hedge against inflation. Next up, precious metals, gold, silver, platinum, and others. These have been a store of value for centuries, and they continue to hold their allure in modern times. They can act as a safe haven during turbulent economic periods. Then, we have the new kids on the block. Cryptocurrencies, Bitcoin, Ethereum, and thousands of others are digital assets that use cryptography for security. They're highly speculative but have the potential for astronomical returns. Hedge funds are another form of alternative investment. These are pooled investment funds that use different strategies to earn active returns for their investors. Think of them as the Swiss Army knives of the investment world, versatile and adaptable. Private equity, on the other hand, involves investing directly into private companies. It's a way to get a piece of the action in promising startups or take part in the turnaround of a struggling business. And last but not least, venture capital. This is a type of private equity that focuses on investing in startups and small companies with the potential for explosive growth. It's a high-risk, high-reward game that can lead to massive payoffs if you pick the next big thing. So there you have it. From gold to Bitcoin, hedge funds to venture capital, alternative investments offer a wide array of options for investors looking for something beyond traditional assets. They're not for everyone, but for those who are willing to take on the risks, the rewards can be substantial. You might be wondering, why should I consider alternative investments? Well, let's delve into the compelling reasons. First and foremost, they present the potential for higher returns. While traditional investments like stocks and bonds have their place, they're often subject to the whims of the market. Alternative investments, on the other hand, can offer returns that outpace the traditional markets. For instance, private equity and venture capital have been known to yield substantial returns, often far exceeding those found in conventional markets. Another significant advantage is diversification. As the old saying goes, don't put all your eggs in one basket. Investing in alternatives allows you to spread your investments across a variety of asset classes, reducing the risk of a significant loss should one sector experience a downturn. Think of it as an investment safety net, catching you when other markets fail. Inflation protection is another strong reason to consider alternative investments. Certain assets like commodities and real estate typically hold their value or even appreciate during times of inflation. So when the cost of goods and services start to rise, these investments can provide a safe haven, preserving your purchasing power. So, where do alternative investments fit into your portfolio? Well, they provide balance. They can act as a counterweight to traditional investments, potentially smoothing out returns and reducing overall portfolio risk. For example, when stock markets are volatile, investments in real estate or precious metals, which are less correlated to stock markets, can help stabilize your portfolio. However, it's essential to remember that alternative investments also come with their own set of risks. They often require a higher minimum investment and can be less liquid than traditional investments. They may also be more complex and less transparent. But with careful planning and due diligence, they can be a valuable component of a well-diversified portfolio. With their potential for high returns and diversification benefits, alternative investments can be a powerful tool in your investment arsenal. So don't shy away from exploring these options. In our ever-changing financial landscape, they might just be the game changer you need. Now that you understand the what and why of alternative investments, let's talk about the how. Accessing alternative investments is not as difficult as you might think. There are three main ways to do so: through exchange-traded funds or ETFs, through mutual funds, and through direct investments. Let's break these down. First, we have ETFs. These are investment funds that are traded on stock exchanges, similar to individual stocks. ETFs offer a straightforward way to gain exposure to a wide variety of alternative assets, from commodities to real estate to cryptocurrencies. They offer the advantage of liquidity, meaning you can buy and sell shares easily throughout the trading day. Next up, we have mutual funds. These are investment vehicles managed by professionals who pool money from various investors to buy a diversified portfolio of assets. Some mutual funds specialize in alternative investments, giving you access to a broad range of assets in one fell swoop. Mutual funds may not be as liquid as ETFs, but they offer professional management and diversification. Finally, there's the option of direct investments. This is where you invest directly in a specific alternative asset, like buying a piece of real estate or investing in a startup. Direct investments offer the greatest potential returns, but also carry the highest risk and require the most expertise. Each of these approaches has its own considerations. With ETFs and mutual funds, you'll need to consider management fees and the fund's track record. With direct investments, you'll need to assess the asset itself, its market, and your own risk tolerance and expertise. And remember, it's not an either-or choice. You might choose to invest in alternative assets through a combination of ETFs, mutual funds, and direct investments, depending on your investment goals and risk tolerance. In all cases, it's crucial to do your homework. Research your options, understand the risks, and consider seeking advice from a financial advisor if you're unsure. Whether through ETFs, mutual funds, or direct investments, there are numerous pathways to explore the world of alternative investments. As we look to the future, which alternative investments should you consider for 2024 and beyond? As we navigate the investment landscape, it's important to keep an eye on emerging trends and opportunities. One sector that's poised for significant growth is renewable energy. Investments in solar, wind, and other renewable technologies are not only good for the planet, they can also yield substantial returns. However, like all investments, they do come with risks, such as regulatory changes and technological advancements that could impact their profitability. Another promising area is the realm of cryptocurrencies. Blockchain technology has revolutionized the way we think about currency and financial transactions. While Bitcoin and Ethereum have dominated the headlines, there are myriad other digital currencies that offer potential for high returns. But remember, the cryptocurrency market is highly volatile and speculative, so it's essential to do your homework before diving in. Next, let's talk about private equity. This involves investing directly into private companies, often through venture capital or buyout funds. With the rise of startups and innovative tech companies, private equity can offer substantial returns. However, these investments are typically illiquid and require a longer time horizon. Lastly, consider precious metals like gold and silver. While they may not be as flashy as some of the other options we've discussed, they have stood the test of time as a hedge against inflation and a safe haven in times of economic uncertainty. But remember, the value of precious metals can fluctuate based on a variety of factors, including economic conditions and market sentiment. Each of these alternative investments presents unique opportunities and challenges. It's crucial to thoroughly research each one, understand your own risk tolerance, and seek advice from a financial advisor if needed. From cryptocurrencies to commodities, these alternative investments could offer exciting opportunities for investors in 2024 and beyond. In summary, alternative investments provide a myriad of opportunities beyond traditional stocks and bonds. They are unique assets, including commodities, precious metals, cryptocurrencies, hedge funds, private equity, and venture capital. They offer a different risk and reward profile, potentially leading to enhanced returns and portfolio diversification. These alternatives can act as a buffer against market volatility, offering a degree of protection that traditional investments may not provide. They can also be a source of income, providing regular returns in the form of dividends or interest. Remember, investing in alternatives requires a thorough understanding of their characteristics, risks, and returns. So do your homework, seek expert advice, and consider your financial goals before diving in. With a solid understanding of alternative investments, you're now equipped to diversify your portfolio and potentially enhance your returns. Thank you for watching, and don't forget to like, share, and subscribe for more investment insights.